and I just wanted to alert you to some of the latest information coming out from the IRS on the Employee Retention Tax Credit. This was published February the 13th, 2024, and that was yesterday as of this recording. And these are 7 warning signs that your ERC or your Employee Retention Tax Credit may not be correct. And this is just alerting us to what red flags they are looking for. So look between the lines. If you fall into one of these categories, this may be a red flag to the IRS. If you were working with me, none of these are going to apply to you, but it's just informational to know. One of the warning signs, one of the red flags to the IRS is if you said you qualified for every single quarter that the ERC was available. Now, you heard a lot of the people out there saying you can get $26,000 in the ERC per employee. That was never really correct, because most people did not qualify for third and fourth quarter of 2021. And if you listen to my videos, I'm telling people it's usually $19,000 is the maximum per employee, because most people do not qualify for third quarter. And why is that? Third quarter 2021, if you were qualifying by a partial suspension, there were no more rules. There were suggestions, but in most every state, their COVID restrictions had been eliminated by third quarter. And so if you were a recovery startup business, there's a box to check, and the IRS knows that. So then they knew you were qualified for third quarter and fourth quarter. But if you applied for ERC for every quarter, that is a red flag to the IRS. Okay, too many employees and doing the wrong kinds of calculations. You have to be cautious. There are a lot of things that don't qualify. Vacation pay and sick leave that was accrued prior to the start of the ERC, or owner's wages, family wages. There are wages that don't qualify. There are limitations. There are subtractions of PPP. If you've seen my previous videos, I've gone through that. There are many things that don't qualify. You need to know how to subtract those out so that you're not taking too many wages and claiming ERC on those wages. Third reason, the third red flag is a business citing supply chain issues. Now, let's be clear, on the 941X, we don't explain why you qualify for the Employee Retention Tax Credit. Only if you're a recovery startup business, there's a place where you check that you are a recovery startup business. Otherwise, you just state, and there's no support really asked for at the time of the submission. But if it comes back around to an audit and if you say it's supply chain issues, this is not solid. And this is always the case from the very beginning. The questions and answers that have been on the IRS website since 2020 stated that if you had supply chain issues, you had to prove that your major supplier was shut down by a government order. And how to do that? We tried. It's just impossible to do that. So people tried to use that, and it's not working. It's not holding up under the scrutiny of the IRS. Business claiming ERC for too much of a tax period. So, for example, first quarter of 2020, only a very small period of time was eligible in that first quarter of 2020, and it is the ERC for that is claimed on the second quarter 2020 941X, and you have to separate out the wages that were from first quarter. So if you have a ton of wages for first quarter and they're more or the same as the wages that you're showing for second quarter, it's going to be a red flag. Also on second quarter, I know in California, the restrictions ended June 14th. So you didn't get the full second quarter of 2021 in most cases. So the IRS is apparently looking at that. Businesses who didn't pay wages or didn't exist during the eligibility period. I don't even know why this one is listed, because I have clients who paper filed their 941. And when you paper file your 941, that is showing you had employees in that time period. And if you paid those payroll taxes and you filed the 941, then it shows you had employees during that period. And so I had people who paper filed their 941, and the IRS was so far behind that they got the 941X, the amended 941, before they got the 941 into their system. They were rejected. They just said, we don't have the 941, so we can't process it. So I would have to tell the client, you need to send back in the original 941. so I don't even know why they they put that in there. As far as I know, from the beginning of doing this for the last couple of years, the IRS has not paid ERC if you did not have a 941 filed for that quarter and you didn't pay the payroll taxes for that quarter. As a matter of fact, they will subtract out from your ERC refund any unpaid payroll taxes, corporate taxes as well. If the promoter is telling you that you have nothing to lose, this is a big mistake. If they're telling you file for ERC, you have nothing to lose. That's not true, because you get this refund. And if you falsely got that refund and you go into an audit, there are huge penalties, because these refunds are treated as payroll taxes. So if you know anything about payroll taxes, late payroll taxes have huge penalties. So that's how it will be treated if you got an ERC refund. Now, they are leaving some, they're giving some people some time to respond if they just went and took the money and thought this is going to be a nothing burger and I'm not going to get in trouble. And they're starting to be worried about that. There is a period of time that you have to call back the IRS and respond. I haven't done a whole video on that. Others have, on what you do if you want to return the money and not get penalized. So if you are falling into the category of somebody had you, if somebody claimed that you could get this ERC and there was nothing to lose, if your signature is on that form, yes, it's your company, and you do have penalties that are potential if you claimed it falsely. So I would take a look into that. So that is the latest. I'll leave the link to this below the video so that you can look yourself and read through these 7 warning signs. And it's obviously what the IRS is looking at as red flags to audit people who have claimed the ERC. I'm Michelle Koppel. Thanks for watching. Feel free to watch my other videos. I've been talking about the ERC for the last few years and really what you have to do to qualify. So it's a lot of detail that's out there in my videos. Please feel free to leave questions. Thank you so much for watching.